ladies and gentlemen, it's time once again for your favorite episodic series of videos that are released every Tuesday like clockwork. This is another episode of Talk to Me Tuesday, just for home keeping purposes. I want to thank you all for the continued support and retweets and reposts of videos that I'm putting out. Um, I'm very grateful for the time that you spend for watching these videos. I know that you're watching them because I can check the analytics of the video. So I know you guys aren't lying. But at the same time, still, I'm going to continue to create these videos because in my interactions with people after they've watched them, they've stated that they've either learned something or cleared something up, or they've been, basically just very generous of the content that I'm able to put out. Now, I want you all to be on notice that these videos may change a little bit. I'm going to invest a little bit more into the production of these kinds of things. So the formatting of the videos may change in a few weeks. Hopefully you like it. If you do, or if, let me know. If you don't, hey, feel free to let me know on that too. But I've gone on long enough about that stuff. This topic this week is like the nitty gritty of the things that I like to cover as far as, everything that I do is concerned. Now, don't know if you remember from the initial videos, or hopefully I mentioned it, but I am a licensed and appointed life insurance producer in the state of Tennessee. I also have a line of authority in several other states as well. And I'm willing to do work in your state should we come to an agreement that we want to do business with each other. But then, that's a separate conversation for a separate time. So, a struggle that I see that people have when I talk to them is, of course, they know that they have life insurance, right? And they know that they have it because their job provides it for them. However, there's always a situation or a time where someone will say, "Well, I want to. I understand what I got at work, but I just want to look around and see if there's anything else that I could get." So then I'm like, "Okay, so just tell me what you know about life insurance." And for the most part, there aren't a lot of just people who are really in the know about life insurance, and I don't blame them because if just take a second to think, like, how many life insurance offices are in like your local area right now, wherever you're watching this video. Is there one off the top of your head without using Google or any kind of locating device? Is there one in 5 miles of your home? What about 10 miles? 15 perhaps? 20? There may be. But you haven't necessarily looked for them because it's just something that, is kind of out of sight, out of mind. If you don't see it, you're not gonna actively look for it. So, in an effort to keep you from being confused whenever you get into the market, I'm just going to cover a lot of the basic ones that you typically come across. Now, I will tell you there are lots of different life insurance policies that you could get. So, within my licensure and know how, I'll cover a couple of them that I know for a fact. A lot of people just don't have a lot of information about. Okay. So, let's just jump right on into it. All right. So, a lot of people, of course, when you think about life insurance, the one type of policy they think of is term. Term is the end all be all, the alpha and the omega of life insurance, right? And the reason why so many people like this kind of policy is because it's cheap. You could get a huge face value for almost pennies at times. And by pennies, I don't mean like 5 or 6 cents. I mean, it's not just extremely expensive to maybe have maybe $1 million of life insurance coverage, right? So then, once you get to talking to people, and you ask them, okay, so what do you have? And they say, oh, I have a term policy. And you say, oh, okay, how long do you have it for? And they be like, well, what do you mean? It's like, well, I mean, it's right in the name, term, so term, if you didn't know anything else about it, the word term would mean that there is a term of time in which you would have this policy. And then people would just go into like a major brain fart sometimes because they generally didn't know. Or if that was explained to them, they were probably, out in deep space somewhere and not really paying attention. So it's a thing that people go through with these policies. They think that they will be good for the duration of their life. However, most people tend to outlive these policies, and then when they try to re-up when the term is over, then of course the policies may be more expensive than what they are willing to spend. So although this is a good form of policy to get a lot of bang out your buck, for a certain period of time, when that period of time ends, you might not like the re-up price. So if you are actually in the market for a term policy, then you want to make sure that one, you're getting a good product. A lot of term policies now are including accelerated benefits. They may be a little more expensive than traditional term. However, you get a little more bang for your buck. But on the second half, with these term things, like I said, if you're just getting straight up term, then there's really nothing that you could use it for too much, outside of the inevitable that tends to happen to people. So if you are in the market for a term policy, you want to specifically look for something that allows you to have a return of your premium. With traditional term, I don't care what it is or where it's from or what benefits it has. At the end of that term, all that money is gone. So let's just say you got a policy that was maybe $60 a month. Now you multiply that by 12, and that's how much that you would spend on their policy in a year. So now you multiply that times the number of years that you have on their policy, and that is the total amount of number. Whoops, excuse me. It's the total amount of money that you're going to spend on the lifetime of that term policy. And guess what? You're not getting it back when it ends. But if you were to look into a return of premium policy, that number that you saw for the lifetime of that term policy, they'll give it back in the form of a check. So let's just say you got a 30-year term at whatever price. As soon as that policy ends, if you choose not to re-up that policy, or if they don't give you the option to convert it into a whole life policy, then at that point you're able to say, well, hey, it's been a pleasure working with you guys. Make sure you send the check. Can you please tell me the address that you guys are going to send it? I just want to make sure that it's correct. I don't want nobody to go to the mailbox or answer the door and assume my check. You know, I wouldn't want to have to escalate, you know, towards to violence if I can't find my check. So that is a thing that you would want to look for. It comes as a rider in some term policies. You just have to look for it. And your agent, if they have that option to offer you, they should at least try to offer it to you. Beware of agents who don't want you to ask a lot of questions, because typically that means that they may be just hungry for a sale, or they really just have only one type of policy that they're able to offer. So just be careful on that one. And in a nutshell, other people have things that are either whole life or universal life, or they may have index universal life insurance policies as well. So those are your permanent life policies, which basically means you'll have those until the day to either you age to either 100 years old, if you make it to 120, or if you were to pass. They also have accelerated benefits, which will allow you to use a portion of the face value should you have some qualifying illness or sickness or something, that you can activate your policy to be able to send you a lump sum of money to help you out. You might have health insurance to help you out as well. However, there may be a portion that your health insurance will not cover. So in that case, you will be able to utilize your life insurance policy. And like I said, they'll send you a lump sum of money. You can use that lump sum of money for whatever your needs and wants are at that point in time. And there's just a burden that's taken off for you. So whole life is the first one that we'll cover. Um, it offers, like I said, the accelerated benefits that you could use. And the major difference between term and whole life policies is they have a savings component built into them, that you can borrow money from once you have the available funds to be able to do so. With whole life and with universal life, the cash value goes at a basically a guaranteed rate. Whole life is a little more strict than universal life, because the premiums aren't adjustable. So like I said, in order for them to be able to guarantee you some kind of growth, they have to make sure that they're able to project it out for you. So if you are in the business for looking for policies, you may want to start with whole life, just to see what those premiums look like for you. If not, then you can move on to universal life if that agent were to offer it. Universal life is a little more flexible than whole life. And what I mean by flexible is, there is a minimum and a maximum that you can adjust your life insurance policy, to be able to cover you in case you have like some kind of financial hardship that prevents you from paying that price for whatever reason. Then you'll be able to at least change how much you pay and still be covered under that specific face value of the policy. Now, the only thing is your cash value probably won't grow as much as it was when you were paying the maximum that you could pay for that policy. But hey, growth is still growth, right? So at least something would be better than nothing. Okay. And basically, like I said, the cash value, it grows too. Is something that you could borrow from on a rainy day. If you watched the video prior to this, this is the kind of policy where you can, I'm not gonna say invest in it, but you could put money into it and essentially become your own bank. And you can borrow however much, $1,000, $600, $500. It's not one of those things where you just borrow $200 or something like that, every now and again, and you're all right about it. It's something that you have to at least let grow and accumulate growth, and then whenever you need it, or whenever you want to use it for something that you need, then it would be there. Unless you just hell bent on using your own money that you have in your liquid savings, then by all means do that. But at least you would have this as somewhat of a quote unquote rainy day fund. Also, if you're in the market for these policies that basically last your whole life, these permanent policies, maybe your best bet would be getting a guaranteed issue policy, which basically means that there is an accelerated rate in which the company approves your policy, because there's not a lot that they look into as far as your approvals are concerned. I mean, there is a process that goes into this kind of thing to make sure that you are a person that they feel they could cover. And at the same time, they want to make sure that you aren't currently in dire straits as of that application. So it does you better to be able to get these sooner rather than later. That way, if you are, you know, in dire straits and you're in need of money and you know you don't have it, then it's going to prevent you from having that hard conversation when someone says, "Well, hey, I understand your need at this point in time, but there's nothing that we could do because you're currently what diagnosed with cancer or something like that, with terminal cancer maybe or something like that." So these index universal life insurance policies, they're also permanent life insurance policies as well. However, catch this. The cash value growth basically imitates the growth of the S&P 500. So, although this really isn't technically stock based and you don't need, and for me, I wouldn't need a securities license or anything like that, um, is something that could provide you more growth than just regular whole life or universal life. So if you know for a fact that you're not going to touch the cash value of the policy for a long time, then it'll be something that's more of a slow build for you. It'll be faster than traditional life insurance policies. However, the more you put in it, the more bang for your buck that you get, and that's the major selling point for these kinds of policies. It's just something that you have to do your research on, and weigh your options. Like, what do I want to spend my money on? Like, do I want to spend it on a whole life? Do I want to spend it on universal life? If they're offering me a IUL, do I want that? Or do I just want to, take a bet on me and do just a regular term policy and do the whole Dave Ramsey thing and be like, I'll just invest the difference between this and maybe a permanent life policy, and then at that point you have to pray for the best. Like, whichever option that you choose is basically on you, okay? Now, there are some people in the world who only have life insurance policies that are good for burials only. And those are final expense plans. Now, a really hungry agent that doesn't really get a lot of business or anything like that may try to cover these types of plans as something that you would be able to use for anything outside of actually being buried or anything like that. And you really can't. These policies, in a nutshell, they go directly, well, the proceeds will go directly to, like, a funeral home or something like that. Is really not a lot that you could do with these policies, prior to your death, or any kind of accelerated benefits or nothing like that. Basically, these are burial and that's it. So, like I said, a lot of people who only have this kind of policy will try to dish it off to you and mask it as if it is one thing, but it's technically not. So I just want you to be in the know about this as well. So check this out though. Like I told you, I am an agent, right? So you hear different stories about how different people will do different things. So our thing in a nutshell, as far as being an agent, We are concerned about helping people to have a peace of mind. And when we ask people about this kind of thing, they get a little skittish. I mean, it's an uncomfortable conversation if it's something that you're not ready to have. Like, you actually have to plan in your mind that you're about to have a hard conversation about what happens to me if something were to happen. So, if you are a person who does not have any kind of life insurance, I don't care if it's from work or anywhere else, like, when something tough happens, it's not your family that's gonna suffer. It's gonna be you, and it's also going to be your perception in a weird way, like how people perceive you. Believe it or not, people are keeping tabs on you and your life, the things you do, the things you buy, the things you say, all kinds of things that you would think that they wouldn't have any kind of information on, they do. So that's the major point about when people put on for these GoFundMe pages or something like that, right? So a lot of times people have illnesses or something that are things that could be covered with one phone call to a life insurance company if they had it. So let's just say, you had a heart attack, right? Knock on wood, we're hoping that you don't. But let's just say you had a heart attack, right? And you didn't have, a life insurance plan with accelerated benefits. Heart attacks are covered under accelerated benefits for life insurance policies. So you could get, couple $1,000s to help out with whatever bills or anything else that comes along with that, right? So let's just say you had a heart attack, you didn't have anything set back for a rainy day. Now your family has to put their pride to the side, and they have to, well, they feel like they have to put out a GoFundMe because, they see these GoFundMe things may or may not work for people. So, people will see it, and then they'll have conversations amongst themselves. They'll be like, "Hey, Tony had a heart attack, right?" He said, "What? Tony had a heart attack?" He said, "Yeah, man, they got a LinkedIn, they got a GoFundMe and everything for him. It's wild. It's like, a GoFundMe, not Tony with the Cadillac, not Tony that buy Jordans every week, not Tony with the big house. Now they begging for money." And then after saying all of that, and giving them you thoughts and prayers and everything like that, you're basically depending on them to have a heart or some kind of kindness for you. And then they give you like 20, $30 and they tell you, get well soon. Well, you can bypass all of that, and you can, take take a step to fund something for yourself. That way, you won't have to run into these kinds of things. Like, these are the main things that end friendships, or they kind of mess your family up, because of the things that are said about the things that you have, um, in lieu of them trying to assist you. So, just take that, don't take it with a grain of salt because these conversations happen. I've heard them. Like, I've been in the middle of listening to people run down a list of items that this person has. And instead of just saying, well, I'm going to donate, it's like, no, I'm not going to donate because this person's house is bigger than mine. They got more cars than me. They have nicer shoes than me. His wife or and his children, they round here thinking they better than everybody else, X, Y, and Z. So no, I am not gonna donate. And who's to say that this money isn't something that could potentially keep this person alive? It's just so much that you will run into if you don't have this kind of protection on your life. But you have to take that step to do it. Like, if it's something that you just don't want to do, then that's fine. But of course, if it's something that you want to do to be, the man or whatever it is that you claim to be, then this is something that you would potentially need to look into. Like, you don't have to spend a lot of money on this. This is the one thing that you can dictate how much it costs. But I get off my soapbox for all of that. So we're gonna wrap this video up. So please make sure that you like the video, subscribe to the channel, share the videos as often as you can. I really appreciate it, and it will help me be located in the algorithm. People are finding these videos. So whatever you guys are doing to help me out, just continue to help me out. This is the latest edition of Talk to Me Tuesday. If you have any questions or you want to talk to me in more depth about it, please feel free to contact me. And thank you for watching. Have a good rest of your